Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, if you have joined us, there can only be one reason why you are here. Like me, you are here to laugh at Santo's misery for thinking that today's bounce back in the market will not last the entire day.
Well, CJ, as I keep telling, this is sell on rise market, and if I were you, I would take some money off the table. Trust me, you should be doing the same.
Whereas the screen is green, the bears are screaming. And as I said in the morning, this bounce back has legs, and that is how it is happening. Right now, because I'm not you, I will not bet against this market. If you're thinking of shorting this market, it's better that you right now go home, take a break from the market and chill, and let the bulls do the work.
We'll soon see about that, CJ.
We will. I mean, look at the market. Nifty and Sensex are surging because what? The bears have been caught in their trap. They have been caught big time. And the short covering in the market has just started, Santo. Just wait what happens before expiry, the option expiry tomorrow. We will see even more short covering, and you will see the market go even higher.
Well, CJ, the thing is that...
Sorry. I know, even I would stutter if I were in your place.
No, CJ, the thing is that the market just can't keep falling in a straight line, however bearish this overall sentiment is. Probably what is happening is that bears are covering a part of their positions and then, preparing to come back with double the force.
Bears are not preparing to come back with double the force. I doubt, the open interest on Nifty 50 futures were down, 4.5% today, and with a 1% up move on the Nifty index, that doesn't suggest to me that the bears are planning to come back. What it is suggesting it to me is that we are heading into the last week of the monthly expiry. Next Thursday, we will actually be having the monthly expiry, and it is very likely that a lot of these bears will be covering their positions because they don't want to be caught delivering shares on the expiry day.
Well, also don't forget the big picture. The concerns about inflation and rising interest rates are pretty much there. You're not seeing it just in India, but you're also seeing it globally. So just beware before you just take CJ's word and jump into the market blindly thinking that this is a market that's set to sustain its gait. Also, the quarterly numbers that have come so far, the general expectations so far were that numbers, at least for the big companies, would be quite good. That's not been the case. It's been pretty much a mixed bag also. As you see, there's been earnings misses from HDFC Bank and Infosys. So probably one can see more earnings downgrades going forward, and I think that will keep a cap on market upside.
Money Control recently did a survey of fund managers, and according to our survey, the estimates for earnings for FY23 is about 10 to 15%. We did the same survey last month as well. The estimate for earnings were about 10 to 15%. We did the same survey in February as well, and the estimate for FY23 earnings growth was 10 to 15%. Between February and between today, a lot has changed in this world.
Exactly.
Yet earnings are not seen downgrades. So I don't know how much.
Just be a little patient anyway. Just be a little patient.
I don't know how much grain of truth there is that we could see earnings downgrade going ahead. That said, it's time to look at some of the stocks. What are you going to bring on my face today?
Well, ACC, the stock you mentioned in the morning, that's up about 6%. That's been one of the better performers of the day. But just hold your horses there, CJ. I feel much of this rally has been driven by short covering of positions more than anything else. So what analysts are saying is, this analyst from Moneycontrol Pro, is that this is a seasonally strong quarter for ACC, and despite that, the volumes aren't just rising. Clearly, there seems to be resistance to higher prices. Besides, the rate at which input prices have gone up, companies have not been able to take price hikes to that extent. So this is something that could weigh on sentiment across the sector. So while you're seeing a big rally here, I think this is something again to be sold into.
Santo, the stock is up 7%. I rest my case.
I think more short covering coming there. That's all I can say.
Yeah, I rest my case. That's why I said stock is up
MRPL, the stock is also among the big gainers today, close to about 13 to 14% rise. The rise in Singapore gross refining margins is one of the key drivers of the stock. A senior official of MRPL was on the channel today and said that Singapore gross refining margins are at an all-time high of $17 to $18, and every $1 rise in GRMs kind of has huge revenue potential for refiners like MRPL. That's about 700 to 800.
But that will last what, a quarter, maybe two?
Well, but there is at least money to be made both in the stock as well as I think in terms of the earnings there. There were reports that MRPL has bought discounted crude from Russia earlier this month. So,
Wow.
everything going in favor of MRPL at this point in time. HDFC Asset Management is the third stock. Now, the stock has is now close to a 52-week low, which might lead many to think that probably this is a good time to be bargain buying in the stock. But just remember, according to MC Pro, the big negative for the stock is that one, it's losing market share, and secondly, it's also quite expensive. Valuations are certainly not very attractive at this point in time. If you look at one of the parameters, which is market cap to assets under management, that's on the higher side. That's close to about 10 times compared to, let's say, its rivals, which is about 7 and 5. So, all in all, this may not be the best of times to be bargain hunting at the HDFC AMC counter.
Until and unless, of course, the RBI forces HDFC to sell its stake in HDFC AMC, then there could be an open offer, and then those who are not buying right now could end up regretting.
Well, fill me in more about that open offer. How?
So basically, what is the case right now? HDFC is merging into HDFC Bank, and HDFC owns stake as a parent. It owns stakes in HDFC AMC, HDFC Life, and a lot of the other subsidiaries of HDFC. These stakes are not owned by HDFC Bank, right? So when the merged entity, merger happens and there is a new entity as a merged entity, the RBI, in order to smoothen the process, because the bank was not an owner, and in order for the bank to be an owner, it may ask HDFC to sell its stake either to the bank itself or the merged entity itself, or maybe to a third party or some outside investors, to basically comply with regulatory norms. In that case, given that HDFC's stake is so much, it is probably more than 25% in both these companies, it will have to make, whosoever is the investor was buying will have to make an open offer, because you have to make an open offer if you're buying more than 25% in a company.
Okay.
Yeah.
Bharat Electronics Limited, this stock is close to its 52-week high. Again, a stock which has been steadily rising. Defense play. Now, one of the reasons why the stock has suddenly gained favor is that the private sector defense players were quoting at huge, they were enjoying a very huge valuation, and which made Bharat Electronics look very cheap. It was going for about less than 10 times forward earnings. Now, that's been corrected to some extent, and there's a valid reason for that also. The order book is pretty strong. It's at a lifetime high of close to about 56,000 crores, which is why there is a lot of interest in the stock, and there was some concerns whether the company was getting paid on time by the Defense Ministry, but even those concerns have been allayed. So
when have those concerns ever not been there for defense companies?
It's been there, but right now if you see that is not the case, which is why people are just piling onto that stock.
For me, defense stocks remind me of this instance from my childhood, when my mom will force me to eat Karela, basically with the promise that she will buy me an ice cream later once I finished it. That ice cream never arrived, and I don't think defense stocks, that rise in defense stocks will ever.
Well, let's see to that. And HAL, now this is a little known story compared to BEL, which is widely owned by mutual funds and other institutional players. Not much interest in HAL so far. Now, this has also been a major underperformer for quite some time now. It's only over the last few weeks that the stock is seeing renewed interest from investors. This year too, the revenue growth is unlikely to be great, but again, order book is at a record high, close to about 80,000 crore. And finally, the point to be noted is that the stock has inched above its IPO price after sustained underperformance, and during the same period earnings have gone up, so which then makes this stock kind of better than what it used to be till a few months.
I'm a little confused. How can your order book be so strong and yet your revenue growth is not going to be that strong? Then that means there is only one concern there: execution.
No, it's not so much about execution. It's also that you get paid when you actually deliver the
right. And so, of course, when they execute the order, then they will pay it, and therefore the payment cycle is so huge. I mean, you won't even know when you are actually going to make those earnings, right?
See, a lot of things are done on leap of faith. That is why that's what the market is about.
You are taking leap of faith. Wow, a skeptic has turned into an idealist in this market, it seems.
Well, that's from my side.
Yeah. So I have 3 stocks that, if I were really looking into it, I would want to go long right now. First up is Oberoi Realty. So fundamentally, of course, bad news came in because there was a delay in one of the projects which is going to hurt their FY22 sales. But if you talk to technical analysts, the stock could remain in uptrend till the end of the April derivative series, which will be at least for the next 7 to 8 days, we could see an uptrend in the stock. At this point of time, if you speak to market people, going short on this could burn your fingers. Whereas because long or bulls have really are in this stock for the long haul at this point of time.
Stock has had a good performance so far, and I think probably that there's a lot of froth now slowly building up in the realty sector. Interest rates are set to rise. CJ, don't forget that has a key bearing on purchase of homes.
Not always. I mean, what's a 5 basis point move going to really affect my purchase decision of a house which is 75 or 80 lakh rupees? It's not.
That is assuming it's going to be a 5 basis. Don't be so presumptuous, CJ.
Okay. I thought it was always about leap of faith.
Yeah.
That is what I'm doing. Anyway, Infosys. We all know the Infosys story. I mean, the stock has been nosediving in the past few sessions, but bears have had their say on the stock, right? And according to a technical analyst, the stock is very unlikely to dip below the 1500 level. Now, if the argument is to be taken, it is probably the best time to accumulate Infosys in this market, given that it's now trading around another 10%, 5-10% fall, and it could be trading about 18-month low. That is insane for a company that has grown about 20% in FY22 and could easily grow around 13 to 15% in FY23. So there is a possibility that if you accumulate Infosys right now, you could be sitting at 200 rupees profit in another couple of months. So that is Infosys.
I think, CJ, there's a fascination with this round number called 1500. Something cannot go below 1500, and
round numbers are pretty.
The overall outlook for the tech sector has changed dramatically over the last
according to some, not according to all.
It's showing in the prices, man. What are you saying?
It's not the consensus view. Sometimes some can overpower the majority. So yeah, that is that. HDFC, another stock that has is down in the dumps over the past 20 days now, almost 14 to 15 days now. It's fallen 19% after announcing the merger, and at that time when it hit its recent high. So now the argument here is that HDFC may not sink below 2050 rupees odd level. So right now probably could be the best time to accumulate the stock for a short-term technical bounce. It's not a very long haul play because there is a lot of uncertainty that still remains on the counter with the merger and whatnot. But from a very short-term perspective, maybe a week or two, you could be in for a technical bounce back on HDFC.
This is not the best time to be betting on anything that is interest rate sensitive, is how I would look at things, CJ. And again, this 19% off highs, that doesn't really make sense, does it? It will not change the fact that when interest rates rise, probably again sentiment for these stocks could take a big
And
beating.
how do you not know that market has not already baked that into the price?
Yeah, we'll see.
It's not that we have been talking about interest rates rising today, or we woke up today morning and we realized, oh, interest rates are going to go up. No, it's been there for the past months now. So yeah, maybe that is also baked into the price. That said, there are two stocks that actually could be pretty good candidates for short selling at this point of time in the market, and they are both from the pharmaceutical sector. Irony is that Nifty Pharma index is actually up today. It's up about 0.6 to 0.8% if the last I checked. And yeah, there is a false sense of safety in healthcare. Okay, volatile markets, you want to protect your capital, low volatility counters, so go buy pharma stocks. But wait, hang on. Cipla's Q3 earnings were not that great. Q4 earnings are also not likely to be that great, because what was driving Cipla's earnings for the past 2 years? The COVID drug sales. They are going to taper off immensely in Q4 because Omicron was not as big of a threat as was made out to be. So that is one one stock that could possibly see some downtrend heading into the end of the April derivative series next week. Secondly, Dr. Reddy's.
Wait, the same argument. If you're saying that COVID sales have been tapering off, it would have been quite evident for the market by now, right? And you've already seen that in the underperformance of the stock. So might be this is a time to probably start covering up the position.
Yeah, but old school guys always say, oh, when it is volatile, let's buy pharma stocks. That is what has been supporting the stock.
Market start cracking, you'll be rushing into defensive stock. Mark my words.
Market is not already cracking. Was it not cracking for the past 5 days for you? Was it not enough for you?
Well,
how much more do you want it to crack,
yet,
my friend?
CJ, yes.
Anyway, Dr. Reddy's. The rally from about 3,650 odd rupees, it seems like it looked pretty good, but now it's starting to falter a little bit. The stock is higher today, I take your point, but technical analysts are not convinced because volumes are, it's not showing in the volumes and the delivery volumes as well. So it is very likely that a bearish trend could or a bearish reversal could happen on the counter going ahead. Again, fundamentally, growth concerns are there for Dr. Reddy's as well. Its US performance in December quarter was nothing to write home about, and if you look at what analyst reports have come out in terms of preview for Q4, a lot has changed. Not a lot has changed on that front.
I think technicals largely depend upon the fundamentals, no, CJ?
Fundamentals, technicals can take cues from fundamentals, but technicals always go by historical price data. That is what they are, trend followers. That is what they do. They will always look at data and that data, nothing else. That said, that was what was on my plate. But is there something that I have missed?
Well, I think there's a looming crisis in food prices across the world.
Especially rice, huh?
Especially rice, yeah. And I think CJ, you would enlighten us a bit on that.
Yes, I would like to. Thank you. Thank you for this opportunity. So, International Rice Research Institute, recently came out with a report suggesting that overall rice output across the world could drop by as much as 10%. Now, why this drop will happen? It's not that the farmers have suddenly gone for a holiday or anything like that. It's not like that. Fertilizer prices have been soaring through the roof. I mean, with the crisis in Russia, in Eastern Europe because of the Russia-Ukraine war, supply chains have been hampered. Plus, lockdowns in China is also affecting supply chains. So, fertilizer prices have been rising through the roof, and that could force farmers to not, cultivate as much of the field as they would have done in normal times. So, therefore, countries like India, China, even Vietnam could see a drop in output in this year. Now, why should you care about that? You should care about that because this could be beneficial on both two fronts. A, rice exporting companies that are listed in the domestic market, and secondly, fertilizer companies. Rice exporting companies could definitely see higher export prices for their output. So that could definitely boost their earnings in the near term. And fertilizer companies, well, with price hikes being allowed by the government so far has not given any indication that we could see they would curtail fertilizer companies from raising prices. What the government is trying to do is probably work on the increase the subsidy side so that the farmers are not that much affected. But fertilizer companies, because they are being allowed to take the price hike, that means their margins are protected, and that could result in higher earnings going forward, at least in the March quarter and the June quarter. The 2 quarters which usually see good amount of sales for fertilizer companies.
Possibly also probably the fact that fertilizer stocks in generally are not owned by institution makes it a big favorite with HNIs also. That
HNIs, and I think a lot of the domestic mutual funds usually tend to, at least the high quality fertilizer. I mean, there is, of course, within every sector there are usually the the high quality stocks and low quality stocks. But even in fertilizer, some of the high quality counters have seen buying from institutional players, at least the domestic guys.
Well, a quick look at the market at this point. The Nifty is holding on to its gain.
Do you really want to look at the market? Isn't it boiling your blood, given how wrong you have gone?
Well, I think there's no point in arguing with the fact. The fact of the matter is that market is up at this point, and it's up close to about 1%, and looks like finally the market will snap.
Look at Tata Motors, man, 4% higher, Tata Motors. Wow.
That said, CJ, what's on the horizon for tomorrow?
Well, earnings and even more earnings. We have two Nifty 50 companies will be announcing their earnings, HCL Tech and Nestle India. HCL Tech, of course, it will be in line with what has happened. We already know what is expected because of the IT earnings that we have seen so far. But Nestle India could be very interesting because it's probably the first FMCG counter that is coming out with its Q4 earnings. So it will be very interesting to see how the volumes fared in Q4, whether the entire urban-rural gap. You made that argument few days ago that because Nestle has a more exposure to the urban market, probably it is a little better off than a lot of the other FMCG companies who are more rural focused. So we will see whether Santo is right on that count or not. Secondly, within the mid-cap space also there are interesting earnings coming out. Tata Communications from Tata Group will be announcing its earnings, and Rallis India, the first fertilizer company. So as I said, it will be very important to look at how Rallis India's performance is in Q4, because that could give an indication on how other fertilizers, the bigger peers of Rallis India, could perform in this quarter.
Well, with that, it's a wrap on this session of Markets with
Yeah.
Santo and CJ. Thank you for watching, and there's still about 10 minutes left for trading to end for the day. So wish you a
A
happy
good close. It is going to be a good close. There's going to be a bang of a close. There's no two ways about it. Please post your feedback, of course, on the comment section below, and do follow us on the various social media platforms and on YouTube as well. And we will catch you tomorrow morning at 9 a.m. And all hopes are and all indications are that we're going to have another green day. Thank you. Thank you so much for joining us.